Ladies and gentlemen, good day and welcome to Advait Energy Transition Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arpit Mundra from Advait team. Thank you, and over to you, Mr. Mundra.
Thank you. Good afternoon, everyone. On behalf of the management, I am pleased to welcome you all to Advait Energy Transitions Limited earnings conference call to discuss the Q2FY26 and H1FY26 financial results. Today, from the management side, we have with us Mr. Shalin Sheth, founder and MD, Ms. Rutvi Sheth, Head of Human Resources and Strategy, and Mr. Vatsal Kundalia, Managing Director, Advait Green Energy Private Limited, key management of AETL. Please note a copy of all the disclosures is available in the investor section of the website as well as on the stock exchange. Anything said on this call which reflects the outlook for the future or which could be constructed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. Now I shall hand over the call to Shalin sir for his opening remarks. Over to you, Shalin sir.
Good afternoon, everyone, and thank you for being present on this call. I, Shalin Sheth, MD and founder of Advait Energy Transitions Limited, welcome you all for earnings conference call of the Advait Energy Transitions Limited to discuss the company's business and financial performance during the quarter and the half year ended. The company expresses sincere gratitude to its investors and shareholders for their trust. It is highlighted by a 51% increase in total shareholders up to 32,500 as of 30th September 2025. The first half of the financial year 26 has been strong with Advait Energy's order book, which is surpassing 1,000 crores. This is signifying robust execution capability and sustained growth. The order book has grown by 177% over the year, with 76% attributed to PTS business, which is Power Transmission System, and 24% is to the NRE business, that is New and Renewable Division. This milestone underscores the company's confidence in continuing to add their orders in coming months, maintaining its upward growth trajectory. During half year 26, the company reported consolidated revenue of 275 crores, which is significant growth of 160% year-on-year basis. EBITDA during the same period was 31.06 crores, with a growth of 87% year-on-year basis, and EBITDA margins were 11.3%, and net worth has grown by 43% year-on-year basis and stood at 263 crores. The below are the key developments that took place during the quarter, like successfully secured the ERS order for 765 kV, 400 kV segment from Power Grid, amounting about 90 crores. That is one of the biggest in this segment in India. We successfully secured a single largest EPC order for company amounting 100 crores plus for the DGVCL for the replacement of MVCC conductor and allied electrical existing transmission lines. We also successfully executed challenging 250 kilometers of stringing of OPW cables on live line, that is for 220 kV charge situation at Power Grid at a very difficult region of Leh and Ladakh. This was done in a record time, having the execution of 12,500 feet above the sea level, and which is a minus 15 degree of temperature. We also successfully executed the first EPC project for installing high tension low sag conductor, which is our new segment for 66 kV line in JEDCO, and we have completed more than 50 kilometers in a record time. We also successfully completed 350 numbers of winch machines for the power transmission line. This is also supplied in a record time. During the time, we also did a record supplies of the stringing tools to the various customers in India and also abroad. Our company also secured its first order for providing the tower erection crane. That is an automatic crane. The company has achieved a strong project execution in this quarter, completing several projects ahead of the schedule and steadily increasing market share in the stringing tools, ERS business, OPGW business, etc. This is supported by ongoing government investments and reforms in the power transmission and distribution sector. The business opportunities are expanding for both established players and the newest entrants. This favorable environment, combined with the company's operational efficiency and strategic focus, positions it well to deliver the improved financial performance going forward. The company remains committed for leveraging market dynamics and government support to drive the growth and sustain its competitive position. Key updates on the business performance for PTS divisions are here below. One is the manufacturing of ACS and OPW cables. In this division, company has achieved its approval with the key Indian utilities, and company has also secured its first live line projects in Malaysia. So we are also looking forward for further live line projects and overseas supplies of ACS in coming part of the year. In PTS power stringing tools, company has done a record sales, and our order book is excellently strong, and we have supplied our tools in more than 5 countries in the first half of the year. ERS, we have received a record order booking, and we are repeatedly looking forward for onward orders for the second part of the year. Company is also putting the new ERS manufacturing facility, which is going to be ready by next month. Company is putting a grand integrated manufacturing facility, which is acquired at 35 kilometers from Ahmedabad in a place called Gangar. All the new manufacturing and expansion of existing manufacturing units will be ready by July 2026 as per the plan, and we are pleased to inform that company has already tied up the capex requirement for the same. Company is looking forward for the strong EPC presence in the products they are operating to, and we have also started getting the sustained revenue for our carbon credit business. The NRE division, which is a critical part of the country's roadmap towards achieving the Viksit Bharat 2047 goals, and also towards achieving the 45% non-fossil energy generation in India, company is committed to provide its action plan for the same. This emphasizes the sustainable development and clean energy transition. The company has introduced attractive product link schemes and encouraging participation in this sector. Leveraging our expertise, the company initiated its renewable journey in 2023-24 by planning of construction of 300 megawatt electrolyzer manufacturing plant, which is coming along with its BESS system project in Gujarat. Company also completed India's first green hydrogen EPC project, and we will be delivering one more project of 1 megawatt in Bharuch in this quarter. These initiatives position our company to capitalize the significant growth opportunities in evolving renewable energy landscape. To summarize, Advait Group has demonstrated strong growth, reflecting its success and diversified capabilities across the power transmission and energy transition sector. Advait continues to focus on developing new product solutions under the power transmission solutions and actively working towards building a robust product portfolio for coming year. In the energy transition space, Advait is committed to becoming key player across the entire new and NRE ecosystem. Company has developed a partnership with the world-class technology providers to develop indigenous electrolyzers and fuel cells in coming time. With this, I would like to hand over the call to CA Narayan Singh for the financial updates of the company. Thank you very much, my friends.
Thank you, Shalin sir, and good afternoon, everyone. I, Narayan Singh, the head of finance and accounts, a warm welcome to the Advait Energy Transitions Q2FY26 earnings calls. It's a pleasure to connect with you all and present our financial results for the quarter ended and year ended FY26. Now, let me give you the key highlights of our detailed and consolidated performance for Q2FY26. Let me start with ATL consolidated financials performance. In QFY26, revenue from operation increased by 101% year-to-year to rupees 95.46 crore due to project executions and well-diversified order book. FY26 EBITDA increased by 62% year-to-year to rupees 15.83 crores from rupees 9.41 crore in Q2 FY25. EBITDA margin stood at 25% in Q2 FY26. In Q2 FY26, PAT increased by 85% to rupees 10.30 crore rupees from rupees 5.58 crore in Q2 FY25. PAT margin stood at 10.79% in Q2 FY26. Debt equity ratio stood at 0.4 times as on September 25 versus 0.68 on 25. Current ratio is 2.09 in H1 FY26 versus 2.33 in FY25. Our long-term credit rating upgrade to CRISIL. Let me start with ATL Consolidation's financial performance of Q2 FY26. In Q2 FY26, revenue from operations increased by 239% year-to-year to rupees 156.87 from rupees 46.23 crore in Q2 FY25. In Q2 FY26, EBITDA is 103% year-to-year to rupees 17.32 crore from rupees 8.52 crore in Q2 FY25. EBITDA margin stood at 11.04% in Q2 FY26. In Q2 FY26, PAT increased by 163% year-to-year to rupees 11.87 crore from rupees 4.51 crore in Q2 FY25. PAT margin stood at 7.57% in Q2 FY26. That concludes with an update on financial highlight of the company. I shall now request the moderator to open the floor for question and answer session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Raj Shah with RK Family Office. Please go ahead.
Am I audible?
Yes,
Hello.
please go ahead.
Yes, you're audible.
Sir, can you provide me the breakup of our 813 crore order book in PTS division, like how much is from RDSS, how much is from OPGW, how much is from Changing Tools, etc., etc.?
Narayan bhai, can you please take up the question? Just a second.
Thank you, sir. And for PTS and OPGW, we have 3.54 crores orders. And ERS division, we have 22.45 crores. And for Tools division, we have 5.97 crores. And PTS, EPC and others, 77.86 crores. And for GS2 EPC, 3.14 crores. And solar EPC 119.90 crore and new energy business base 137.38 crores.
So I missed your RDSS number. What is RDSS order book?
Yes. Just a second, please. Hello. This side part here. RDSS figure is 270 CR.
270 CR. Okay.
Yeah.
So, sir, my second question is, when I add up the revenue of our products in PTS division from presentation, it adds up to 70 to 73 crores. And we have reported 97 crores. So from which product does balance 25 crore is coming?
Narayan bhai, please check. This should be STLS.
Yes, sir.
You're talking about revenue, right?
Yeah, revenue.
So it's from, wait a second. Parth bhai, you should do the entire briefing once again so that,
Yeah, I'll brief you entirely. Your first question was the breakup for the order booking, right? As I mentioned previously, the RDSS order booking is around 270 CR. Now your next question is about the revenue, right?
Yeah.
Yeah. So revenue breakup, if I talk about, yeah, so revenue breakup, what you are asking, the rest is from the STLS and stringing tool division. Just a minute.
Okay. My third question is, so last year, 3/4 of our revenue came in H2. So what are we expecting? Are we expecting same this year? Like 3/4 of our revenue came in H2 last year. So what are we expecting this year?
Actually, you know that this is very difficult to answer about the numbers, but we believe that we will maintain our growth in a growth trajectory that, you know, that overall growth rate about 50-60% that we did. So these are the numbers, you know, year we are looking forward.
Okay. So, sir, when are we planning to have revenue from BESS division, as we have received a BO order of 130 crores earlier this year? So when will revenue start?
You're talking about which division?
Battery energy storage system.
We expect the battery energy, the first 50 to 60 crores of supplies to be done in the month of March, and the entire order to be completed by June. That is Q4 25-26, maybe 50 crores, and balance 60 crores or something will be Q1 of 26-27.
Okay. Thank you.
Thank you so much for your questions.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Shivam Singh, an individual investor. Please go ahead.
Am I audible?
No, please come in the range and talk. We cannot hear you.
Audible now?
Yeah. Please go ahead.
Yeah. So I want to ask about the cash flow and trade receivables. It is increasing very significantly. Do we need to raise equity, or how are we planning to deal with it and work around it?
Can I have your questions to be repeated so that I can take up the questions once again? Can you please ask the question one again? Yeah.
Yes, sure. So the cash flow and trade receivables is increasing as we are scaling up our businesses. How do we plan to work around it? Do we plan to raise equity, or are we going to fund it via debt?
For our existing operations, we are not foresee any requirement of equity raising, and it will be able to sustain on its own. And since the business, you know, that if it is growing by more than 100%, definitely we need to use our bank limits, and we are able to get the bank limit as and when required. So we are not looking forward for any equity from existing business.
So our return on equity is much lower than what we are using up, and our profit does not sustain the cash flow requirements that we need. The trade receivables have increased by 60 crores in the H1, but our profits is less than 27 crores. So there's a 33 crore difference that we need to fund.
Actually, what is happening, these are the things which is changing month on month. So when the quarters are changing, so it's a circulatory nature of the business. So these funds you will see in the coming months will be there in the books. So it's just circulatory nature. Otherwise, I should look at how the business is being run, and we do not find any difficulty in any case. In fact, since last 3 to 4 quarters, our company is able to even expand our existing projects from our internal cash flow.
But sir, our incremental revenue has lower profit margins. So as we scale, that will be a problem.
Sir, we are not looking for only the percentage of margin. We are looking forward the quantum of the margin that is going to increase our net worth of the company. At the same time, it should be able to sustain the operations. And as I told you, from our internal cash flow, we are also able to fund up our new expansion from inter cash flow. So we do not find any problem. And if you want any specific details, I'll be very happy. You can just ask the questions, provide your email. We can provide the complete working from my CFO to you in time.
Okay, sure, sir. And sir, regarding the AGPL profit margins, so when do we see an increase in it?
See, I would like to address these questions to the benefit of all the respected shareholders or the interesting party at this call. See, from my desk, I will say that when you're building the organization, when you're building the business, when you're building the enterprise, you always should look at that how we can increase our capability, capacity, and qualification. So AGPL, we are at the phase of doing all the three things. And we are proudly saying that for AGPL, last quarter, we are now qualified for bidding very big EPC orders for the solar. By next month, we'll be only among the few companies, maybe 2 or 3 companies in India who has completed 2 projects in the green hydrogen. So that is one more thing. We have received the very strong support of the banks. So we have been also getting the capacity, and we have built up a very strong team. So, that for making any business, it takes some time to come to the rouse to give the margins, and we are very confident that it will match our group margins in the year to come.
Okay, sir. So do we have any IP or patents in the BESS or hydrogen segment?
Your question is patent, am I right?
Yes, sir. Any patents or any intellectual properties that we have? Because further competition will enter. Do we have any defense against it?
A good question. See, what I'll say that we have done a technology transfer agreement, and under the agreement, that the same technology cannot be given in a particular segment in a particular country. That's what we have done. Similarly, for fuel cell, we have entered an agreement that for our Asia Pacific region, we'll be only holding those technology and which is patented. So these two things are patented by our partners, but this region belongs to us. So that's why we have secured the future of the company. There is one more product which we have developed recently, and Advait is going to have their own patent. We cannot disclose the name of the patent now, not name of the product now, but we'll be able to inform to you in next 1 or 2 quarters that those products are patented in name of Advait. And for BESS, let me tell you, we are not a research company. So we are looking forward for our actions into manufacturing and some project space for the BESS. And I think that does not require the patent for now. But we'll be able to give you some good news in the time to come about the BESS also.
Okay, sir. And sir, is there any future plans of de-risking from PSUs because major elections of UP and other states are coming up? So government funding is going to dry up. Do we have any plans against it?
See, your company at the moment is not working in a business of 3,000-4,000 crores. And all the products that we are operating are very essential in nature, like optical fiber, like ERS, like special conductor that increase the conductivity, like this BESS that has to be done in time. So these are the specialized funded projects, and we do not foresee any problem because those are the priority sector of the government.
Okay, sir. And sir, do we have any capex in the near future after the one we are finishing right now?
So regarding the capex, I would request Mr. Priyanksa, who is sitting with me, to answer the question.
So as of now, whatever the capex has been tied up, apart of that, in AETL, we are not going to incur any fresh capex in coming financial year.
Okay, sir. Thank you so much, sir. I'll get back into you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes to the line of Raj Shah with RK Family Office. Please go ahead.
Sir, earlier when I asked about revenue mismatch, so you told me that it is from changing tools and HTS project. So they are already in the slide. So what I was asking is, if you see slide number 19, slide number 20 of your presentation, and if I add up the revenue of the PTS division, it comes to 70 to 73 crores. And you have reported 97 crores. So from where this balance 25 crore is coming, that I was asking.
Just thank you for your question, Vatsal this side. Just give me few seconds and we are getting back to you with the exact breakup of revenue. Just give me a few seconds, yeah? Thank you.
Yeah, okay.
Meanwhile, we can go for the next question.
Yeah. So, sir, you told in your commentary that opportunities are coming out of India, like you won an order in Malaysia also. So, sir, how big they can be? And in coming years, are we targeting that this much % revenue will come from outside India?
Parth Gandhi, please try to reply.
Yes, just a second. This side Parth here.
Yeah. Regarding that Malaysia orders, this is regarding the live line installation of the OPGW, wherein we are going to do the installation of more than 800-900 kilometers in the Malaysia, and the order value, if I convert it into the Indian rupees, the order value will be around 12 to 15 CR, anywhere between 12 to 15 CR.
So, sir, I was asking that, is this one time or are we targeting any other projects outside India? And if we are targeting other projects outside India, then how big they can be?
Yeah, of course. So Malaysia is stepping stone. Apart from Malaysia, we have already been bidded, we have given our expression of interest in Ethiopia, which is around 500 kilometers. We have already been given our quotation and interest through KEC in Kazakhstan. So we are doing the OPGW liveline business outside India. Apart from that, we already have footings in the overseas market through our supplies of stringing tools.
Okay. Okay, understood. So my next question is, facility coming in July 2026, is it of electrolyzer or of existing products?
Sir, can you repeat the question once again, please, sir?
The facility which is coming in July 2026, is it of electrolyzer or of existing products? And how much capacity will get increased?
So your question is that the capacity that we are adding, that is for electrolyzer for some other product, am I right?
Yeah. Sorry.
See, I would like to elaborate the answer of the question. As I told that we are coming up with an integrated manufacturing facility. In this, our both the division, PTS and NRE, will be having their own manufacturing under new manufacturing. So PTS is going to be expanded existing operations of the ERS by putting the new ERS manufacturing plant, which will be supplying about 350 towers per year. That will be the capacity. Stringing tools, our capacity will be increased from current 30 to 40 crores to 80 to 100 crores per year. And then for our NRE business, we are first putting 10 megawatt of capacity for building up of the electrolyzers that will be ready by the month of January. And we are looking forward for putting 300 megawatt of manufacturing capacity under this segment that will be ready by end of 2026.
Okay. Thank you, sir. If you have answered to my first question about revenue mismatch.
Yeah, sure. Vatsal this side, I am just giving you a quick breakup of the revenue that we have reported. For 5.16 crore is from ACS OPW business. 20.95 crore is the revenue from stringing tools business. 2.26 crore is the revenue from ERS business. 6.32 is from the reconducting of HTLS project business. 23.91 crore is from power discom projects. 16.13 crore is from the OPGW liveline projects business, and the rest 20 crores is from power transmission stringing business, which is done for our EPC customers. This is basically conductor and cable stringing.
Okay. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Bansal with NBG Investments. Please go ahead.
Yeah, good afternoon. There is a news item on Money Control today which says that center to temporarily slow down renewable energy tenders as generation outpaces absorption capacity. So, what is your view on that? Have you experienced any kind of slowdown on the ground, or how do you see it?
Good afternoon, sir. May I know your name, please?
Basant Bansal.
And sir, you are from, sir?
NVG Investment.
NVG Investment. So, I think you would have heard this is about the slowdown of some of the solar sector. Am I right?
They are talking about renewable energy tenders.
I know, but that too in renewable, you might be talking about the solar. Am I right? So I would request you to please go through that article once again. If it is solar, then we can reply to you. Because as per our knowledge, the solar sector for the time may or should go down. I can explain the reason to you.
Please. They have not mentioned whether it is solar or other things.
Okay. Basically, by and large, when we talk about the new energy sector, people think about solar sector. This is because of the very strong and fast capacity build-up into the solar installment in India in last 2 years, in last 3 years. Now, additional build-up is creating the issues with the system stability, system harmonics, and providing the power requirement onto non-solar hours. So the immediate need has come to stabilize the system by augmenting with the other transient energy solutions, so that you might be seeing that many states are maintaining their obligation for the storage, EOS, energy obligation for the storage. So under EOS scheme, lot of BESS projects are coming. So as soon the BESS project will pick up and to be installed, again the solar will go on. So it's a temporary slowdown as to match up the system harmonics.
So will it impact our operations for the current year or maybe for some time during next year?
Sir, we are at the moment doing minuscule part of the total sector. We will continue to growth with that segment as per our existing growth plan and numbers.
Okay. Thank you. This is helpful.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Shivam Singh, an individual investor. Please go ahead.
Hello.
Yes, please go ahead. Yes, you are. Please go ahead.
Sir, so the order book that we have, what is the margin that we are working on in those one? Because it would be L1, right? All the bids.
See, to be precise, we have got order book from the PTS and NRE, both the divisions separately. PTS is a business we have demonstrated our ability by creating the qualifications and again we strategize. So we hope to continue with the same margin year-on-year basis, which is basically EBITDA between 14 to 16%, and that we've been doing. So, and for the NRE, we hope to improve the margin.
Do we have a blended margin range we are looking to achieve?
I think it would be some kind of indicative answer from my side. So from management perspective, I should not be able to answer these things.
Okay, sir. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Gautam Asmekar, an individual investor. Please go ahead.
Yes. Good afternoon. Am I audible?
Yes, you're audible, sir.
Please go ahead.
Yeah. I just wanted to ask about the PLI scheme. Are we on the track for the timelines laid out by government for installing the electrolyzers and getting the benefit of the PLI? And second thing, when do we see the benefits of the PLI visible in our balance?
Thank you for your question. The PLI scheme, which is going to affect the production and supplies done from the year 27 to 31, it may be possible that with the requirement of the industry, it may be extended for a year to the benefit of the all PLI holder with respect to the sector.
Okay.
For your kind information, I was a part of the CEO forum, which was called by Honorable Ministry of Renewable, and we had discussed this point very significantly, and we are hoping forward a very strong momentum in this segment time ahead.
Okay, but as a company, we are on track regarding the timelines set by government. As a company, we are perfectly on a time so that we do not miss the opportunity. At the same time, we do not load existing operation. Okay. And partly my question related to the solar EPC was answered by you in the previous question. But as you said, you need a BESS also as a supportive thing for the solar energy, to get the demand picked up. So how are we capitalizing on the BESS part? Because it seems that we need a lot of heavy BESS projects so as to complement the solar energy. So how are we capitalizing on the BESS thing?
Sir, thank you for the question. Can you please repeat your name and your company, please?
Gautam Asnikar, individual investor.
Individual. Thank you for the question. I think as we have taken our first project of 100 megawatt hour to be completed by June, we are bidding some more projects, but we are very capital sensitive and we are very margin sensitive company. So we'll see about the margins of the project. At the same time, your company is planning to put up their upcoming manufacturing facility for the BESS DC block supplying, and we hope to be ready by year 26. So this is the way we are going to capitalize this requirement and momentum.
Okay, thanks a lot.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Basant Bansal with NBG Investments. Please go ahead.
Yeah. Sir, on the balance sheet side, I have two questions. One is the other current assets, which has increased from 32 crore to 57 crore. So what is this increase for, and what are the main items included in it?
Yes. Thank you for asking questions. In current asset, mainly increased due to reclassification of our withheld money, which are due in next 12 months.
So that is from trade, your debtors?
Yes. This is the withheld money which is receivable after completion of the project, which can be due in next 12 months.
Okay. And if you don't mind, what would be the quantum of that?
It is approx 46 crore.
Okay. And my next question is on the investment side. So this has increased from 12 crore to 54 crore. So again, if you can help me understand what is this increase for and which type of investments you have made.
Yes.
So we have invested in our subsidiary company called Advait Green Energy. Our commitment there to set up 300 megawatt of electrolyzer factory, also to tying up the technology partner for getting the licenses for electrolyzer and fuel cell. So we have invested this money for building up EGPL as per our plan, and this is our investment into new and renewable energy segment. And we are time ahead. We are looking forward for making this operational and making it successful.
And what would be the quantum of that investment?
So the amount which you have quoted, the investment in subsidiary, is the total amount we have invested in Advait Green Energy Private Limited.
So this entire 54 crore is investment in subsidiary?
Yes, absolutely correct, sir.
Okay. Thank you very much.
Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Shalin Seth for closing comments. Mr. Seth, please go ahead.
Thank you, everyone, on behalf of the management of Advait Energy Transitions Limited. We thank you all for joining us on this post-earning call today. We hope we have been able to address the majority of your queries. You may reach out to me or our investor relation partner, E&Y, for any other queries that you may have, and we will connect with you offline. We can now close the call. At the same time, I would also like to put one more closing remarks, that we are further creating a very strong manufacturing capabilities, and we hope to complete the manufacturing expansion for the PTS division by Q3 for the 2026-27. And for AGPL, the manufacturing of the electrolyzers, the first part, 10 megawatt, will be ready in the month of January. And the second part, up to 300 megawatt, we are planning to complete by Q3, Q4. And we will be in touch with you guys if there is any opportunity of investment arises. We'll inform to you guys. And we are looking forward for continued growth. And with the very strong tailwind of the industry and our know-how of the products and market, we have been able to provide you these results since last 3 years, and we need your continued support. Thank you, everyone.
Thank you. On behalf of Advait Energy Transitions Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.